Hey guys, John Paulamy here, Actionable Intelligence Alert. Today is Saturday, October 5th, 2019, and this is the weekly market update. So, in this week's reality check, I want to talk about a story I was just recently reading. I've read it before and was aware of it, but I don't know how many of you guys are. And it's a story of Sir John Templeton. He was a famous investor. He's dead now. He died, I think, a few years ago or maybe 10 years ago. And he was a famous investor. He started the Templeton Funds mutual fund group. He was renowned for his ability to find value stocks and be a contrarian. And I wanted to talk about one of his first major value / contrarian calls and bets that he made, and how it kind of applies a little bit to thinking, how it applies to some of the things that we're trying to do, specifically uranium. So as I said, he was famous for seeking growth opportunities outside the U.S. He came into the markets, working in the financial markets, basically during the Depression. He was a guy that came from a smaller town. I believe he went to Yale, and then he was a Rhodes Scholar at Oxford. He came back and got some jobs on Wall Street. But one of his great qualities was that he had a very contrarian tendency, and he was able to identify value regardless of overall trends in the market. And that's kind of what we've been alluding to a little bit here, talking about. It's like, we don't have an advantage. We have no ability to say where the S&P is going to be in the next year or what the economy is going to do. I mean, these are kind of mugs games. We don't have an advantage. I mean, I'm not going to sit here when you have all these PhDs and AI and all these analysts on Wall Street, JP Morgan, Citibank, all these places that are constantly having meetings and discussions and point papers talking about, what's the effect of a quarter-point interest rate cut by the Fed, blah, blah, blah. We have no advantage there playing in that game. And I think our game is to find value, find bombed out industries, countries, whatever, that have a catalyst, and then position ourselves to take advantage of a change in the sentiment towards that value play, such that it gets revalued in some time frame, likely to be anywhere from 3 to 5 years. That seems to be what Mr. Templeton did. And I like, what I found, a quote here, not a quote, but basically what he did was, instead of looking for markets or sectors whose outlooks were considered rosy, he sought out those which had been abandoned or overlooked by investors. And that's kind of what we do here. His first bet, big contrarian bet, was in 1939. And he basically, what he did was he took his grub stake, and I can't remember what it was. I think it was like $10,000 in 30s money. It's probably like a couple $100,000 in today's valuations because of inflation. But regardless, what he did was, let's remember what 1939 was and what was going on in the world. This is almost a decade now into the Great World Depression, deflationary depression, the New Deal, the ups and downs of all that, the turmoil. It's not like, that's something that doesn't ever change. I mean, if you want to talk about biblical things, there will be rumors of wars and, earthquakes and all. And this stuff continues to happen regardless of what time in history you're in. But think about what he was looking at. He's looking at, this demoralization, pessimism in the U.S. economy, the world economy, coming out of a depression, trying to get out of a depression. All the, back in those times, there wasn't much of a safety net. I mean, there's 30% unemployment in this country. And, you can kind of get a scope of that of watching various movies from that era, but you really can't get a sense because you weren't living it. The so-called great financial crisis that we had in 2008, I mean, people weren't like standing in line and going without food. I mean, we have a welfare state. It wasn't comparable. So think about the mindset and the temperament and the pessimism that was out there. And then think about what's going on in Europe. I mean, this was during the time of Germany reasserting itself under National Socialism, Adolf Hitler, invasion of Poland, subsequent invasion in 1940. France, this already had happened prior to 1939, which was the annexation of Austria, the Anschluss of Austria, and then the absorbing of the Sudetenland and Czechoslovakia, and just these other things that were happening. And so what he did was, in this era of maximum pessimism, is that he went out and just bought shares in any U.S. stock that was trading below $1 a share. Now, he didn't go out and do an analysis of each company. He just said, look, I'm going to take the other side. We're the United States. I don't know his thinking. I haven't been able to find a book or an interview or something like that that really got into his thinking. I wish somebody would have asked him. It's like at that time frame, like, what were you thinking? And maybe he was thinking to himself, okay, well, the United States, things aren't, we've had wars before, rumors of wars. I mean, he was an educated man at Oxford. He knew this. He knew that things wouldn't stay the same. He knew that the United States probably was, at that time, was one of the emerging powers on Earth. It was surrounded by two moats, the Atlantic and Pacific Oceans. It would be insulated from any continental European wars. So maybe he was thinking that the pessimism wasn't warranted. I don't know. Suffice to say, though, we, with a historical rearview mirror, can say that within 5 years, his portfolio grew by 400%, obviously because that would have been 1944 going into 1945. It was obvious at that point that the Axis powers, i.e. Germany, Italy, and Japan, were going to lose the war, and I'm quite sure that the stock market was reacting to that. So what I'm trying to convey here is that, how to think contrarian, an example of a contrarian investor. I like modeling myself or investigating successful people and trying to figure out their thought process. As Charlie Munger says, I'm not going to try to reinvent the wheel here. I'm not that smart. I'm not smart enough to do that. It's easier just to look at the previous actions of very smart people and emulate their thinking and their process. And the fact that something that was obvious, it was obvious because of the industrial might of the United States and the resources that the United States had, that it was just a matter of time that we would be able to overwhelm the Germans and Japanese just because their industrial output. I mean, that's one of the things I like to do, is play these various war game scenarios. They're very complex now with computers as they get more. And I've played the Axis side many times. I just cannot make it work because you just get overwhelmed eventually just by the industrial power of the United States, this unrelenting ability to mass produce war materials and men and supplies. And as the war drags on and Germany and Japan have just become more constricted, it was just obvious. I think it was General Yamamoto, after the successful Japanese attack at Pearl Harbor. He said that, I believe, if you watch Tora, 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 or even if you read history, they're all congratulating him at the end of the movie, and he's just sitting there very stoic at the end of the table. And he says, "Gentlemen, all I fear we have done today is rouse a sleeping giant," and that's exactly what happened. So maybe that's what Mr. Templeton was looking at. He was he was an educated man. Knew his history. He could see what was going to happen. And then it was, he had to wait 5 years though, right? 400% return. When he made this investment, he did, and like I said, he didn't analyze every one of these below $1 stocks. He just bought a basket and held on for what was not a if event, but a when event. And that kind of segues into, our whole discussion around uranium that we've had. If we boil it down and distill it down to its basics, it's a supply-demand imbalance long term. The supply being constricted as more and more mines have been taken offline. No investment going into new mines. I mean, we've talked about this ad nauseum. You're not going to have people commit hundreds of millions of dollars, and in some cases billions of dollars, to bring new uranium production online if they cannot show that they will have a decent return on that invested capital. And that's not going to happen at the current prices of uranium. Problem is we've discussed before, is that this is an extractive industry, And if you are not replacing your reserves that you are taking out of the ground, that you are mining, then you are basically liquidating your business slowly. So that's the supply side. The demand side, I mean, all you got to do is follow John Quakes on Twitter. He is the Grand Marshal of uranium and nuclear power news. And it seems like every day somebody's either commissioning a new unit, somebody's talking about building a new unit, they're pouring the slab for a new unit, fuel rods are going into a new unit, first criticality on a new unit. It's just nonstop growth and new news about new nuclear. The extension of existing projects or operating units having extensions being made to their life. And this is all positive. At some point, this intersection of supply and demand will yield a raise in the uranium price or an increase in the uranium price. So obviously, we don't know when. It's a when event, not an if event. But the asymmetry of this, just because the industry's been starved for capital for so long, is what makes this what a lot of people are saying. Mike Alkin, Marceau, Lopez, all these guys, a lot of people in this industry that are investing in this or speculating, they're saying this is the biggest thing they've ever seen in their careers. And I don't think that's hyperbole. I think that's actually true. You're talking about, I'm John Polemy, the rag man. I'm not, running a hedge fund. I'm talking about people that have been serially successful people running private equity or hedge funds saying this. So, but if you're common sense, if you're looking at it from the data that we're seeing, that's all we can infer. That's just the timing. And I hate to just use these cliches, but hey, I'm going to go back to Uncle Jesse. It's not the buying and selling, it's the sitting and waiting that made me my money. Jesse Livermore quote that I've used many times. So anyways, Kazatomprom had a capital markets day back on September 30th. I'll put a link. You can watch the entire thing. It's like an hour and almost 2 hours long, an hour and 50 minutes. There's a lot of BS in there. They got the ambassadors have to say something, but you can fast forward and get to the comments from the CEO and CFO. And the one thing that I keep, there's a lot of people out there that seem to think Kazatomprom is just, this old Soviet dinosaur that's just going to produce and try to, they already have a big market share. They already have control of this thing. But still, they have changed their way of viewing things. They're not on a 5-year plan. One of the things that the ambassador talks about is that he calls it the previous ruler, or I call him president, but he's post-Soviet, previous Soviet leader, Nazarbayev, who retired recently. The ambassador to the UK from Kazakhstan says the same thing. We're turning over to new, younger, more dynamic leadership. So the Soviet mentality, the 5-year plan. I mean, Nazarbayev being retired now, you're going to see more guys coming along. I mean, the CEO of the company is a Kazakh. He speaks very good English. He's educated man. You can see he is of a younger, more dynamic. And, that doesn't prove anything. I guess there's a risk out there still that, Kazatomprom at any time can just flood the market. That's what a lot of people are worried about. But, they floated part of the company in an IPO. This is their first capital markets day. They're trying to manage expectations and sentiment towards their company. And this is what you expect to see. Why? Because they want to maximize the resource. They're not just going to produce for the sake of producing so they can, have these propaganda posters. The 5-year plan means more production, bread and electricity. Socialism is bread and electricity. Those days are over with. And I think that, they realize that this is a finite commodity that they have, and they want to maximize the benefit of the extraction of this commodity such that it provides the most long-term benefit to the country and to the shareholders. I mean, biggest shareholder is still the state, Kazakhstan, and they, have a mandate to, I think, pay a dividend and some of these other things. So just overproducing for the sake of production is not going to work going forward. So I threw up a couple slides here from the market day. I mean, here's what it says at the top of the slide. You can believe it or not. It's like committed to market discipline. So we've had these, things on Twitter. Is this a cut or is not a cut? What's the meaning of a cut in production? Hey, look, the bottom line is they're not going to be overproducing. They've reined in. They understand where they're at, and you could see that things are leveling out there. I'm not saying it's necessarily a cut. What is a cut? How do you do? It's like, what's the meaning of is? Suffice to say that it's a supply impact to the market. You couple this with Cameco, you're talking about the 800 and 900 pound gorillas in the industry, and we're already in deficit. You can have some discussions and arguments about how much of a deficit we have in supply, but this is where we're going. And if things don't improve, then I think we'll see additional cuts. I mean, I don't see a lot of multi-billion-dollar investments or hundreds of millions of dollars being invested by these companies. Now, what we are seeing on the sly, I mean, I think there was a news article this week, Ross Adam just did a big deal down in Namibia for exploration production licenses in the country. I think that we need to keep an eye on what China is going to do and what Russians are going to do, because I think that locking up long-term supply, this is where the world's going, to nuclear power. I just saw that, there was a big discussion about the Chinese. They're building, I don't know, 20 or 30 or 40 gigawatts of coal-fired power. And I just saw the Indonesians were just talking about commissioning this huge coal plant and then putting another 32 gigs or 32,000 megawatts of coal. So, I mean, coal is still going to be around, but I think that, a generation mix, especially in China and India, and just seeing, like I said, every day more and more announcements as people want to have a fuel mix, and it's the cleanest, cheapest way of generating electricity. So I think you can take a listen to it. I'm not going to go over the whole thing. I just want to throw a couple slides up from this capital markets day that I thought were interesting. I mean, here's the WNA data that Kazatomprom put up. I mean, this is the new WNA supply demand, which is basically showing this growing gap. And 10 years in this industry is the standard. So, if you go out 10 years to 2028, I mean, you can see this gap. If you don't start having these investments in this year, next year, 2021, I mean, that feeds into bigger and bigger supply deficiencies going forward. And I think that at some point that realization is going to hit the utilities as they have more conferences, and this sentiment change, this thinking is going to change, that we have this, overabundance of cheap uranium, so we've been able to sit back on our laurels and call and be price makers, when I think that the realization setting in that the supply of uranium is not what most people think is going to be over the next 10 years. And if we don't lock in and start making some deals, we're not going to necessarily have the security of supply that's required if you're running a nuclear fleet. Remember, the cost is not the object. When you spend $2, $3, $4, $5 billion on a nuclear power plant, it doesn't really matter if you're paying $25 a pound or $100 a pound for the fuel. It's still a very small cost in the operation. You have that sunk cost that you have for building the plant. You can't afford to have it not run. So you will pay what you need to pay to have the fuel for that plant. And of course, there's no substitution for, you can't, like in a coal plant, you can co-fire gas or fuel oil, just change the burners out and do the lineup properly, and you can arbitrage fuel savings. When I was running a biomass plant, it was gas co-fired. We would use gas on startup, and then if gas was cheap enough, sometimes we were allowed to co-fire gas to a certain percentage and to lower our costs. You can't do that in a nuclear power plant. If you don't have nuclear fuel, the thing doesn't run. So we need to keep that in mind. Overall, I think that I haven't talked a lot about uranium in the last few months. It's kind of died down, a lot of the talk, even on the Twitter sphere. I mean, you either get it or you don't, and you're either going to wait or you don't. I mean, I just continue to peck away at, I still like just buying physical uranium. I think that, with the turmoil that's going on in the markets, with the fact that it looks like the world economy is slowing down, even the U.S., I think as a smaller investor speculator, people are always, I was listening to a podcast this week, it's like, where is the big money going to hide? There's nowhere to go. Dollars and, hide in the U.S. dollar or gold. I mean, you can't put $100 billion. I mean, I don't envy these people. Where are they going to put their money? But I think as a small investor, we can carve out these little positions for ourselves. I mean, uranium, I think we've seen the bottom. You can buy as much physical uranium you want via Yellow Cake or UPC, and I think you could ride out you would be safe there. Your money would be a little bit safe because why? I mean, these projects for these new power plants get they're thought out 3 to 5 years in advance, and once they start construction or once they start operating, they're not going to turn them off. So I think that we've seen the bottom. Yeah, if we had a psychotic break in the markets like 2008, the mining shares are probably going to go down. I mean, the stock market goes into a bear market, 95% of stocks go down. So, but I think that buying physical uranium, uranium participation, Yellow Cake, those type of things. I think you can put some money there. You're not managing $100 billion. You can't put $100 billion in the physical uranium market. You can't even buy stocks. I mean, you could buy the whole uranium mining industry right now for about, I don't know, under $10 billion probably. So that gives us an advantage, I think, that big players don't have. And I saw some people, I think people are getting discouraged. I've said that even almost a year ago. People were already getting discouraged then, but I'm not. I mean, I've been through this before with gold. I've been through this before with other, and that's in other speculations. And, I mean, that's why I told the story of John Templeton and his buying of a basket of stocks when things were looking most pessimistic for the world, right on the verge of World War II and coming out of the Great Depression. And he scored a big hit. If you either have the conviction or you don't, and we've talked about that before. So I'll put a link to the Capital Markets Day, and you can go take a look at that at your leisure. I thought this was very interesting. I've said for a while that the zeitgeist is changing towards renewable energy, towards climate change, man-made, man-affected climate change, as CO2 being the climate knob, if you will. And Michael Moore, I don't necessarily agree with most of the things he says. He kind of aggravates me, but I will give him credit. He does occasionally do some deep thinking. I mean, he was out there even prior to the 2016 election, and he said, look, I mean, he's from Michigan. He's from the blue collar. He has his finger on the pulse, and I've talked about this before. Even in my working in these smaller Midwestern towns when I do these constructions that I'm doing, of about how the people are. And he said, Trump, this is going to be the biggest, and I'll use his terms, mind fuck of all time, that Trump's going to win the election. He was warning that in 2016. He knew the pulse. He wasn't for Trump. As a matter of fact, he's one of these orange man bad guys, but he understood that Trump was going to be a vessel, be a thumb in the eye of the working class people, of the people that have been left behind. The people had no other outlet for their frustration except to vote for Trump. The next step after that is violence, and people aren't ready to do that. So Trump is a vessel. He's a manifestation of decades of frustration. He said that. That takes some thinking. That takes being able to put aside your emotions, your ego, your political beliefs, your biases, and make that prediction. And now he's just made another movie. I haven't seen it. It's not out for distribution. I'm going to watch it when it comes out because I found it interesting just on the articles that have been posted about it, and I'll put a link to them. It's called Planet of the Humans. And the film asserts that environmentalists have oversold the benefits of renewable energy. Well, hello, we've been saying that for a while. Physics, mathematics, resource supply, intermittency, we've talked about all these things. This is from the article. Mr. Gibbs and Mr. Moore critique wind energy for requiring enormous amounts of copper and rare earth minerals. The producer, this Gibbs guy, says, it was kind of crushing to discover that the things I believed in weren't real. not only are the solar panels and wind turbines not going to save us, but also that there is this whole dark side of corporate money. And they go into the fact that, Michael Moore's arch enemy a lot of times is the Koch brothers, and talking about, how the Koch Industries has this big sand operation that supplies the requisite sand for the solar panel glass and things like that. And this really discouraged them. It's like, well, hello, wake up. I mean, if there's money to be made, all the grifters come out. Why are all the oil companies for renewable energy? Because they know it's intermittent, it's going to raise the demand for natural gas. I mean, the world's not going to stop using more energy. We used more energy today in the world than we used yesterday, and we'll use more tomorrow and so on. Yes, there'll be little intermittent declines because of recessions and stuff like that, but the long-term march, the graph is going from the lower left on an upward slope to the upper right as far as energy demand goes. And people are not going. Any poll that happens, it's more and more people are not buying into it. Okay, and there's an industry out there that doesn't live up to what it's claimed. And in my view, this can only be good for nuclear power because it's base load. It's on all the time, except for when you take a fueling outage or some other outage. If you have to do some work on a generator, turbine generator, or whatever, steam turbine generator. But there's no intermittency. It's on all the time. It's cheap. It's gaining more traction, and there's a lot of people out there doing good yeoman's work getting the facts out. And this is a real crack in the dam. I mean, Michael Moore is a heralded. I mean, I read further into the article, and he was like kind of worried about putting this up in front of these liberal crowds, and they actually got a standing ovation. They got he was worried to just get a. I mean, I think this is going to, along with all the other things that are happening, the zeitgeist is changing. Reality is now going to creep in. And this gives people more space because a lot of the useful idiots out there and morons that really don't know what's going on, say, well, Michael Moore, I mean, let me take a look at this. They'll start parroting it. And it gives some space, I think, for some of the politicians. Right now, if you listen to Warren and some of these other people, they want to get rid of, the Green New Deal still out there because they'll just say anything to get elected. But I think, the failure in Germany of the energy change it's recognized as a failure. You spent hundreds of billions of dollars and your CO2 emissions went up, and so did your electricity costs. I mean, people aren't stupid. They are going to react to the economics and the reality. If you hit somebody upside the head 3 or 4 times with a 2x4, they eventually get the message, regardless. So I'll put a link to this article. I think this is very interesting, and I think it needs to be thought about some more. Now let's try to move through these last couple slides quickly. I mean, Scorpio Tankers is going on a heater. I talked about it last week. The president of the company bought like 1,500 call options at a strike price of 28, expiring in January of next year. So he's basically saying that this thing's going to go well above 28 because basically at that time 32 or 33 because just for him to break even because of the cost of the options. So this thing looks like it's breaking out on the chart. Why? IMO 2020 plus seasonality around tankers it usually gets more active on around this time of year. And there's an interview, I will put a link to it, that a guy on Seeking Alpha did with this Busby guy back in August, but still applicable, where he said, this IMO 2020 is the most significant regulatory situation and how he thought it was going to affect the market. And I think we're starting to see it play out. So what happens? The guy went out and bought another 1,000 call options that expire in January, which is 3 months this week. So this guy's in for 2,500 call options that, he's in for almost $1 million worth of call options that expire in mid-January of 2020. And he needs his stock to move up to, about 33, 35 range, 36 range just to break even. So he thinks it's going substantially higher. And, we've talked about what Harris Kupperman has said about it. This is one of his biggest positions. he said the same thing. I've posted links to his writings on it. Am I saying you need to get involved with it? No. Do I own the stock? Yes, I've owned the stock since the lower 20s. Small position. I don't have it in the portfolio, but even some of the stocks that we have in the portfolio that are shipping companies are starting to bottom out and starting to move higher. So I think we don't know the full effects of IMO 2020, but we do know that if we were going to see some movement, we wanted to start seeing it around this time frame and going out through the end of the year. So this is another thing we'll keep an eye on. If you are a speculator, it's something you could look at. I mean, crude tanker rates have shot through the roof too because the president, the U.S. put sanctions on U.S. Chinese tanker companies, so that's taken them out of the game. There's less available, very large crude carrier capacity now, and that's what a speculator does, right? He looks for government interventions, arbitrary interventions into the market, and they distort the market in a temporary manner. That's what a regulation does, like this IMO 2020. That's what an executive order banning, putting sanctions on Chinese tanker companies that takes supply off the market. You know, we have recent all-time highs in crude tanker rates. So, I mean, if you're not paying attention, I mean, you can make money even in when the S&P hasn't really moved in the last year and a half, but yet there's still niches in the market, things that are happening, and that's why you have to be aware if you're going to be out there. You can't just buy a passive S&P index fund and think you're going to get away with making money. Last but not least, I wanted to show this chart of gold. Gold's at still maintaining that 1500 level. You can see it's above its 200-day. Came back down to the 50-day. I think it needs to pull back. It's had a good run since early in the summer. One thing I want to point out about this is, put it at the top of the page. Central banks around the world have cut interest rates 65 times in Q3. I'll put a link to the article and to the website I follow. I mean, that's money printing, folks. The whole world's printing money. Why wouldn't gold go higher? I expect gold to move higher. We're seeing the world economy now, more and more indications of slowdowns, more and more PMIs dropping below 50, and they're going to, the only thing that these central bankers know how to do is cut rates, print money. So I think that that's bullish for gold. Long term, medium term. Obviously, you can have short term pullbacks. Things run up, nothing goes straight up. But I think that we are in the midst of a gold bull market. I believe that this is also going to spill over into the general commodity market. And I think that people need to be a little bit worried about these equity markets. They're still high. The U.S. looks like it's now starting to roll over the economy, and that would not be good for earnings. As Larry Kudlow says, earnings are the mother's milk of stock prices. If earnings are going down or they're not growing, then that's going to be a problem for overvalued markets. But hey, I'm not in the prediction market on these stock markets. I'm just telling you that gold, I think, is in a bull market and it's probably going to be going higher over the next several years. The thing that I would note, though, is that you can see that I think the comparisons on earnings are now going to start flowing through. You're going to start seeing some substantial earnings comparisons from last year to this year, just based on this several $100 run we've had in gold since June. You're up about $250 or whatever. That's a lot of money. We've talked about operating leverage in mining companies. If you were breaking even at 1275 and you're mining 1 million ounces a year and you're up 250, your costs don't really go up that much. All that goes to the bottom line. You went from breaking even to making $200 million a year in cash flow. So I think you're going to start seeing that flow through. That will start showing, people have lamented the fact that a lot of the gold stocks haven't run. Why aren't they going up? The gold price went up. I think you're going to start seeing that interest. That's going to start popping up on generalist screens. Oh man, look at this 100, 200, 300% increases in earnings. What's going on over there? And then people start delving into it and they start saying, okay, you get a slight sentiment change, funds flow change, AI starts picking it up if these stocks start moving, and then you start getting yourself into a bull market. So that's what I see happening. And I think that there's plenty of cheap gold stocks out there. We've highlighted a couple in our fund. One of them's up. It's a royalty company that's up almost 100%. We've also got ourselves involved in an ETF that I think has a special way of looking at this that can lead for a passive investor to outperform your typical GDX or GDXJ. So you may be interested in taking a look at that. So we're running a little bit long here, guys, about 35 minutes, but a lot of good information this week. Appreciate the. It looks like I think YouTube might be censoring me because I'm not really getting a lot of new subscribers. Had a steady rate of subscribers. It seems like after I made some disparaging remarks towards climate change, and they felt the need to put a link to the Wikipedia article on climate change to kind of balance out my view. I don't know if the algorithm is you know clamping down on showing people my suggested videos. But regardless, we've got a core group of guys here, core group of people that listen. I appreciate you guys. It's all about what reality is, not what we want it to be. That's the only way that we're going to be able to navigate these markets and make money. So I appreciate you guys. Thanks a lot for the support, and keep on listening and keep on commenting. We'll talk to you next week, guys.